Hey everybody, this is Charles Dobbins. As I told you in a previous vlog, my Saturday morning vlogs until January 1st are going to change. They're going to be more focused on getting you to work with me because now is the time to do it. No more sitting on the sidelines, no more excuses. Don't come to me in February, say, I wish I had known you back then when your price was $10,000 lower than what it is today. No apologies whatsoever. That's what's going to happen with my program. I'm ready to rock and roll. I'm ready to choose those select students who are going to work with me and get started. But in today's vlog, I want to educate you on an amazing email that I received. There's a company out there called Offered.com, OFFERD.com. Yes, I intentionally spelt it wrong. That's the way they do it. My partners in one particular venture that I was involved in, we engaged this company. This company's job is to go out there and find deals for people. They go out there and source deals. We had a one-year contract with them, and they did a phenomenal job. Whatever I'm about to say is a slight to Offered.com. I really enjoyed working with them. Top flight people, absolutely awesome. In that 1 year that we engaged with them, we got one deal under contract. We went to the due diligence, and the deal eventually didn't go through because of pricing issues. But they did a great job. They really found us a good property. It took them a year, and they found one. That's no slight to them. That's what the market was doing at the time. All right. Things are changing. I just got this email alert from the CEO of Offered, and I'm going to read to you just the most important parts. And he says, a message from the CEO. As you and we all know at this point, the multifamily party is over. After years of cheap money combined with high leverage, conditions have turned like a predator smelling blood. Here are a few examples of what we've been seeing and would love to hear your experience. So please let us know. And let me give you these three examples. In Texas, we sourced a new construction asset off market in the second quarter with pricing guidance at $95 million. By the third quarter, that guidance had dropped to $75 million. We originally submitted an LOI at $70 million, and now even that price is hard to pencil. In Oklahoma, there was a portfolio that went to market at $34 million in the second quarter, but had a failed campaign. We contacted the owners off market, and pricing guidance had dropped to $30 million. Ultimately, it went under contract for $27 million. And the last one, an even more amazing example of pricing concession is a 1999 Florida asset we sourced off market early this year. The initial guidance was $139 million. Later in the year, it went to market at $124 million, and the campaign failed. The ownership group reached back out to us off market with guidance at $115 million. Then guidance dropped to $110 million. Now it looks like we may submit at $90 million and have a good chance of getting the deal. And then he goes on. I'm just going to read this one last line because I thought it was very, very interesting. He says, if you've never experienced this kind of market turnaround before, it can seem like you've landed on another planet. For example, older properties had been fair game even last year. Now, if a property is from 1979 or earlier, the trouble getting a deal is going to be significant since both equity and debt are steering clear of 1980s product. Folks, it's changing. And if you think those numbers that I just read to you that the CEO is going after is outside of your world, okay, that's fine. It's outside of most people's worlds. But this is happening in the business, and it's going to trickle down to the mom and pop properties when they find out they can't sell the property at what they used to get. And also those people that bought properties with short-term debt, like 5 years back 4 years ago, they're feeling it. They overpaid for it back then, and now they have to refinance, and they're not going to be able to. And those deals are going back to the bank. Stay tuned for my next week's vlog because I'm going to talk about the workout and distressed asset world and how it works. So, folks, now's the time. My prices are going up in January 1st. If you want to start working with me, click on the link below. Let's set up a time to talk, and let's get to work. Thanks.